Today, the SEC sues another major crypto exchange, this time Coinbase. Crypto markets whipsaw following the SEC's latest enforcement actions. And Cory Klippsten of Swan Bitcoin breaks down the effect of that crackdown on the industry and crypto prices. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are holding steady after the SEC's announcement of charges against Coinbase one day after the agency sued Binance. As of noon Eastern, Bitcoin rose about 0.25%, trading around $26,000. Ether gained about 1%, and Binance's BNB token was down by less than 0.5%, trading at around $280. Crypto markets initially tanked following the news on Monday that the SEC sued Binance. Investors pulled around $780 million from that crypto exchange and its U.S. arm in a 24-hour period. That's according to data from blockchain analytics platform Nonsen. Expanding on the SEC's continued crackdown on crypto exchanges, the agency sued Coinbase in New York federal court this morning, accusing the crypto exchange of operating as an unregistered securities exchange, broker, and clearing agency. Today, the SEC also charged Coinbase for allegedly failing to register the offer and sale of its staking as a service program. In the complaint, the SEC argued that at least 13 crypto assets available to Coinbase customers, including Solana and Polygon's Matic token, are considered crypto asset securities. Earlier this morning, the two tokens fell more than 3% and 5%, respectively. Responding to today's development, Coinbase Chief Legal Officer Paul Grewal told CNBC in a statement that, quote, the SEC's reliance on an enforcement-only approach in the absence of clear rules for the digital asset industry is hurting America's economic competitiveness and companies like Coinbase that have demonstrated a commitment to compliance. He went on to argue that the solution is legislation that allows fair rules for the road to be developed transparently and applied equally. Coinbase was warned of potential securities charges back in March when the SEC issued the crypto exchange a Wells notice. The next month, Coinbase sued the SEC, asking a federal judge to force the regulator to share its answer on the company's July 2022 petition on whether existing securities rulemaking processes could be extended to the crypto industry. As of noon Eastern, Coinbase shares fell around 12%, building on their 9% loss from yesterday after the SEC unveiled charges against rival crypto exchange Binance and its founder Changpeng Zhao. Today, we have more information on those allegations against Binance and Binance US. Yesterday, US regulators unveiled 13 securities charges against the company and CZ, alleging that Binance had been engaging in the unregistered offer and sale of securities and that Zhao and his entities had improperly commingled investor funds with the firm's funds. The agency also alleged that the crypto exchange subverted its own controls to allow institutional US investors to use Binance's international exchange rather than the US version, which was supposed to be a completely separate entity. In a long blog post yesterday afternoon, a Binance spokesperson said that the firm had been actively cooperating with the SEC's investigations and has worked hard to answer their questions and address their concerns, but that the agency, quote, abandoned that process and instead chose to act unilaterally and litigate. The post also said that any allegations that user assets on the Binance US platform have ever been at risk are simply wrong. In a seeming rebuttal to Binance's arguments, the SEC tweeted a quote supposedly from Binance in 2018, where they said internally, "We are operating an unlicensed securities exchange in the USA, bro." SEC Chair Gary Gensler weighed in on the recent lawsuits against the two crypto exchanges. Speaking on CNBC's Squawk on the Street this morning, Gensler argued that the trading platforms are, quote, commingling a number of functions which in traditional finance wouldn't be allowed.
We have concerns when a platform like this puts themselves out to the public, is consciously trying to evade U.S. law and customer funds. It's fundamentally a lack of controls, deception, conflicts, and yes, we're going to do that which we can in front of the courts and make, to the extent we can, the facts known and the public protected.
All right, let's keep talking about the SEC's latest enforcement actions for our main story. I spoke to Cory Klippsten, the CEO of Swan Bitcoin, about these lawsuits and what they'll mean for Coinbase, Binance, and the price of Bitcoin. All right, Cory, well, thank you so much for joining us today. The SEC is really ramping up their crackdown with these lawsuits against Binance and Coinbase in the last 24 hours. What's your reaction to the latest legal action here?
Wow. I mean, what a surprise. I actually just found out about the Coinbase suit a few minutes before hopping on here, being out on the West Coast and dealing with kids in the morning. But yeah, I guess the biggest surprise for me, honestly, is just timing. I've browsed through some of the top tweets and caught up on the content of it, and it's basically what everyone expected. I think just the timing of it was sooner than most of the people I was talking to were expecting, more like maybe as late as September, possibly something like July or August. So seeing it literally the day after the Binance suit is pretty wild to see.
Coinbase definitely the news of the morning, but Binance happened just yesterday. So let's break this conversation down into the two. On the Binance side of things, the SEC and CFTC seem to be in pretty close agreement as to the allegations that it violated US laws and allowed US customers. How significant is that case against Binance?
Yeah, so even on first glance, it looks like the Binance case is significantly worse for the defendant than the Coinbase case. In Binance's case, they included the founder, CZ, Brian Armstrong, not named in the Coinbase suit, and the seeking of immediate relief. So that's kind of a 48-hour process. I guess we'd be 24 hours into that. So they're trying to shut down Binance US immediately. And then, the details are in there that because Binance and Binance US were not separate, the SEC wants to see, down to the penny, down to the token, I guess, the books of Binance, the international organization. And so some kind of refusal to comply with that would basically put CZ in a position where, he'd be facing charges and probably couldn't go to nations that are friendly to the US and have extradition and things like that. And it would probably roll out from the US as kind of the example for how to deal with regulations in financial markets. There are a lot of countries that would essentially follow suit and do whatever the US did to Binance International as well. So that's my opinion of what may happen. But yeah, scary times for CZ for sure. Luckily, he bought a $145 million yacht, so he can maybe jurisdiction hop on that thing.
Well, on the other side of this is Coinbase. They've been ramping up their battle with the SEC ever since the Wells notice the agency served the company earlier this year. Coinbase has been vocal about their belief that they've done nothing wrong here, and they're trying to fight the SEC's approach. How successful do you think that pushback will be?
My take is that it was always doomed, and that the signs of how all of these altcoins, all the non-Bitcoin cryptos were going to be treated was actually out back in February of 2018 when Jay Clayton said that they were all going to be securities, basically. So I don't think that there's much surprise here, other than in the kind of the people rooting for the crypto industry from the inside. So the insiders that make the money, basically, obviously are rooting for their team. But I don't think there's anything surprising here. In particular, I think they deliberately and very specifically called out Ethereum staking as being an offering of a security. And we know this has been the lifeline for Coinbase. This is the recurring revenue that companies dream of having. And so they've been basically in bed with Consensus and the Ethereum Foundation, basically the management team of Ethereum, trying to push that really hard and getting a nice, healthy revenue rip off of the Ethereum staking. I think Coinbase has something like a fifth of all Ethereum on their platform doing this staking thing, which is basically an interest-bearing account.
Yeah, and that lack of a surprise, the news really hitting Coinbase shares, but not so much prices of cryptocurrencies, because I think a lot of people, like you said, are not that surprised. You're a US-based business out of California. Is this latest crackdown from the SEC changing how you think about operating in the US? Or more broadly, do you think it makes similar exchanges or businesses rethink their US operations? We saw it in Canada with OKX and Binance as it changed its regulations.
Yeah, so it was a deliberate choice when we started Swan to be Bitcoin only, because that was the only one that was definitely a commodity and never going to be called a security. And so feel completely comfortable operating in the USA, headquartered in Los Angeles, and don't see any reason to change anything really about our business model. I think, the one thing that we're thinking about now is, oh my gosh, we're going to be able to advertise and we're going to be able to market, and we're not going to get choked out of the auctions on Google and Facebook ads and Facebook network by the crypto casinos overpaying for Bitcoin words so that they can go and convince people to trade altcoins. So I think that's really exciting and creates an amazing opportunity for promoting and helping people understand Bitcoin and kind of presenting the truth about Bitcoin as opposed to the affinity marketing scams that the crypto people have been promoting for the last few years.
And go a little bit further than that for me. The complaint this morning that the SEC filed against Coinbase outlined those 13 crypto assets that could be deemed crypto asset securities, is I think what they were calling it. Of course, Bitcoin not listed in that. Is that ultimately good news for Bitcoin?
I mean, honestly, it's good news for humanity. I think just very clearly delineating this one thing has no centralized issuer and is a commodity, and these other things are essentially a new kind of company, and this is a new kind of stock. That's essentially what Ethereum and Cardano and Ripple and all of these things are, right? They were created out of thin air by some company. They had a pre-mine, they were marketed, and they were sold in a securities offering. And just being very clear about it, I think is probably the right way to go. At least it's the fair way to go. You can argue about whether the SEC should exist or not, but given that it does, and given that it, creates capital markets that allow Coinbase insiders to sell billions of dollars worth of stock and buy nice homes in the hills, you're basically a hypocrite if you want it for thee, but not for me.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.